Hi, this is John Murphy, and we're going to be trying something new here at stockcharts.com. As you know, I've been doing audio updates where once, twice a week I just kind of talk about what the markets are doing or maybe one or two market messages. We're going to try to make it a little bit more visual for you, a little bit more interesting, a little bit more educational, and hopefully more fun for all of us. I'm going to start with a market message that I wrote on Thursday afternoon, October the 4th, having to do with the fact that money was beginning to flow into pharmaceutical stocks for the first time in a while. Healthcare has been doing well, as have consumer staples, defensive type stocks. This is the first time that we have seen money starting to flow into the pharmaceutical group. And I want to begin by looking at chart 1 in that market message and talk about the group in general. Okay, well, if you take a look at chart 1, you'll simply notice that the bars there, that is the American Stock Exchange Pharmaceutical Index, and you can see why it kind of caught our eye this week. It rose above its 200-day moving average. This is the first sign of life we've seen in that particular index. The solid line along the bottom of chart 1 is simply a relative strength ratio, and you can see that even despite this week's pop, the pharmaceutical stocks have really been terrible underperformers. But part of the reason for that is because two of the biggest stocks in the drug index are Johnson & Johnson and Pfizer, and they have been among the weakest components of that index. There are, however, several drug stocks that have actually done a lot better. Now, if you move on to chart 2, you'll see what I'm talking about. Chart 2, it's a performance chart. You can actually create this by yourself by going to the performance charts, but I'm not going to talk about that today. What I've done is I've taken the 4 strongest pharmaceutical stocks over the last 7 years, since 2000, and I'm showing them on a relative strength basis. First of all, the pharmaceutical index is the flat black line running through the middle of the chart. By doing it that way, we can actually see what each drug stock is doing relative to the industry. What jumps out on that particular chart is Abbott Labs, by far, has been the standout performer in the pharmaceutical group over the last 7 years. But I want to focus on the 3 on the bottom right now, Merck, Schering-Plough, and Bristol-Myers. You notice they've been moving up over the last 2 to 3 years. I want to blow that up a little bit and show that a little bit more, fine-tune that a little bit more. And if you go to chart 3, if you look at since the beginning of 2005, you'll see that all 3 of those stocks have done much better than the drug index. In fact, Schering-Plough, which is the blue line, has been the strongest, followed by Merck and Bristol-Myers. So obviously, if you're thinking of putting some money into the pharmaceutical group, I would certainly suggest that rather than buying the ETF, which deals with the whole group and includes the weaker stocks, you might want to concentrate on some of these stronger pharmaceuticals. And then chart 4, which is basically the same chart, but I just put Abbott Labs back in, and I'm just showing it since the beginning of the year. But again, Schering-Plough, Merck, Bristol-Myers Squibb, and Abbott Labs. That's where the strength has been in the pharmaceutical group, and they've been much stronger than the industry, than the pharmaceutical index, which is the black line at the bottom of the chart. And then just very quickly, a snapshot, chart 5 shows the daily bar chart for Schering-Plough. Looks like it's moving up toward its old high. And I think my favorite chart in the group is actually Merck. It looks like it's consolidating. Looks like it may be getting ready to test its old high. If you look at the relative strength line along the bottom, you'll see good relative strength as well. And the beauty of the pharmaceuticals is that they are defensive stocks. They're large multinationals. They do benefit from a falling dollar. And also they have defensive qualities. So in a weakening economy, this may be a good group to look at. But if you decide to do that, I think these would be some stocks that you might want to focus on. Anyway, we're going to end it on that. And as I mentioned, we'll be experimenting with this format over the next few weeks. And we'll get it into a format that we like and that works for everyone. Anyway, on that note, this is John Murphy. I wish you all a nice weekend, and we'll be back in touch next week. Bye-bye.